So thank you so much for watching How to Stay Ahead of the Housing Market with myself, Danielle, Quinn, Silveira, your realtor from the Monterey Bay area of California. Today I'm joined by the impressive Matt Falconer with O2 Mortgage.
Hello.
Today we're going to be going over what is a credit back. So this is a term that does come up pretty often actually. So Matt, can you go ahead and go over that for our audience, please?
Glad to help. Okay, so what is a credit back or a lender credit from the lender's standpoint? So lenders are actually obligated to offer this to clients. So I'd like to start by illustrating what it means to receive or pay credit. Today's rate is right at 3.75%. That's today's prevailing rate. It's a very good rate. And we're looking at a $700,000 loan, which is typical for our area. 1 point is 1%. So 1% of 700,000 equals $7,000. Okay, so with that said, nobody giving each other any money. A lender credit is the opposite of paying points. Paying points is where a person wants to buy a lower interest rate. For example, they could say, hey, I really want 3.5%, Matt. And I would say, okay, that's gonna cost you 1 point or $7,000. And you get a lower interest rate and their lower payment. The opposite of that is the credit. That's what we're really talking about. The opposite of that is where someone would say, hey, I'd like some money from the lender. Instead of giving the lender money, let's get some from the lender. It's a good idea sometimes. 4%, now the person, the buyer, you guys, you're gonna get money from the lender. We're gonna give you money. Because you're taking a higher interest rate, it creates a premium or a yield or a credit that we then give the borrower to cover some of their closing costs. So now they receive $7,000 by taking a little bit of a higher interest rate. What you have to consider though is the higher interest rate comes with a higher payment. In this case, it's about $100 higher than the prevailing interest rate. So yes, you get the money, it costs you monthly about $100. Someone might say, hey, I'd rather have the $7,000 and I can afford the $100 per month because that's a lot of money. On the other side, again, you can always pay points. Just to reiterate, the lender has to offer 3 options. No one giving anyone money, paying money, or receiving the points, the credits. And that's how it works.
That's perfect. Well, thank you so much, Matt. I really appreciate you really breaking this down. Let's go ahead and let it so people can really see how much information is on this board and how important that really is. So if you did find this video informational, please like, subscribe, and if you'd like to see further information from us, leave a comment below on what you would like to see, what you would love to learn about. So thank you so much for watching How to Stay Ahead of the Housing Market with myself, Danielle, Quinn, Silveira, your realtor from the Monterey Bay area, California, joined by the impressive Matt Falconer with O2 Mortgage.
That's me, thank you.
And we look forward to seeing you next time. Thanks so much. Bye. Awesome. That was sick. We did it.